Welcome to StockOdds Odds and End podcast. I'm Dave Singh here with Rob Friesen, getting ready for the week ahead. Good evening, Rob. How's everything?
Not too bad. Not too bad. Thank you. Nice to have a long weekend. Get caught up on some things, hey?
Yeah, do a little extra work here too, and get a little breather before our shortened 4-day week coming ahead. But it is mid-month seasonality, and we've got options expiration and some earnings coming up. So there's still some interesting things to talk about for the week ahead.
Well, take it away with what's on the horizon here for, let's say, the economic reports this week. What do we got?
Yeah, so let's pull that up. On Tuesday, we have the Empire State Manufacturing Index, so some insight there as to how manufacturing is doing. Wednesday, retail sales at 8:30 a.m. Eastern. That'll give some insight into how the consumer is holding up. And then at 2 p.m. Eastern, the Beige Book. Thursday, we've got initial jobless claims and housing starts. And Friday, existing home sales. So the themes of the week are manufacturing, retail sales, employment, and housing to see how the economy is holding up. And then there are some earnings starting out Tuesday. Some notable ones are Morgan Stanley and Goldman Sachs, United Airlines. Those are some of the bigger ones. And then on Wednesday, we've got Kinder Morgan, Alcoa. Thursday, Netflix. That could move the NASDAQ a bit. And Procter & Gamble. Yeah, and Friday, Ally Financial. So it depends on what you're trading in your baskets. So I think now we're in that season where you need to cross-check your symbols each day against earnings, upgrades, downgrades, etc.
We did have Friday talking about this concern of hers about the debt reaching the statutory limit.
Mm-hmm.
So as of Thursday, that would be where we're at with the limit. So might be some concerns there that could cause the market to stumble a little bit. I'm not sure. So we now owe 31 trillion US. That's it's a lot of dough.
But that's in 2023 dollars, right? Not 1950 dollars.
That's true. Yeah, and so this is a compressed week here. And I mean, although it doesn't seem like there's much in the way of economic, news, there are some things that are, again, going to reinforce this inflation or recession theme. Plus, we've got, with these bank earnings and stuff, right? I mean, Goldman Sachs is that's a big one, right? Morgan Stanley, that's a big one. So that's going to give us, the start to this week, right? A shortened week as it is. And then, of course, it ends in expiration Friday. So sometimes there can be a lot of pressure on, these strike prices. Where's the maximum pain? And you can see that things move towards that maximum pain because, people that have used options for speculation or for hedging or, they don't want them exercised necessarily. And so that's why we have a maximum pain threshold. But it's going to culminate in the week in expiration. And then after that, we often have a bit of a transition or reversal or pivot. That's possible as well.
Mm-hmm.
So, what's the seasonality for the remainder? Like we've got a combination here. We're still in mid-month, and then we've got the Friday expiration event as well.
Yeah.
So there's a seasonality for that. So you want to rattle off a few of those things?
Yeah. So mid-month seasonality for the SPDR is expected to do 1%, right? And then the small caps are expected to do 0.56. So not as good as the bigger cap things. And then even the NASDAQ is better than the SPDR, 1.67% for the NASDAQ, 1% for the SPDR, and 0.56 for the IWM. So they're supposed to be very robust for mid-month seasonality. And also the third Friday of the month, this coming Friday, Again, all of them show really positive values. 0.7 for the Spider, 0.82 for the IWM, and 0.66 for the QQQ. But then after that, the end of the month, the last 5 days, last 3 days, last trading days, those are all very negative. So it seems like the bullishness kind of peaks out mid-month, January. And that may tie into what you were talking about, people in mid-December doing the tax loss selling and then buying it up in the first part of January, and they kind of peak near the options expiration Friday.
Well, I think that's why we get our bounce. I think whenever you see a pattern, you have to ask what's the fundamental reason why. And I don't know that for the January bump, that payroll deposits, 401k money accounts for all of that we normally see historically. So I believe the other part of it is the rebuying of positions that were sold, the previous year. And of course, last year was a really bad year. So I would imagine that you want to, take the chips off the table there and get your tax loss selling. So,
and also the ETFs within mid-month seasonality. We've got QQQ, XLK, the SMH. So a lot of the technology stuff, bullish. Also gold and some of the staples, with energy being weaker. So XOP, right. XLE, and even the solar stocks, the TAN ETF.
Yeah. Normally don't talk about this, but I'm going to talk about Bitcoin. And I was looking at a Bitcoin chart just to see what the current volume situation was, and because it's had a little bit of a rally here since January 1. Have you noticed Bitcoin's kind of back in, and we've always used it for a risk on type of an indicator. And so the theme is, if there's rebuying of some of these beaten down tech stocks, and there was a hesitancy to kind of get back into tech at the very first week of January, and it picked up a little bit in the second week, and NASDAQ didn't do too bad, and also small caps have done pretty good. So then it's, carrying this theme over about, where is all the supporting information for risk on, and Bitcoin could be a part of that again. There was a little bit of its leadership and relevance that was lost more in the latter half of this year, or last year, the latter half of the year. It wasn't as important as an indicator anymore. But, if you think about what's happened with the capitulation, the crypto winter, the FTX flush out, plus some other things that have happened in that space. You think about all the miners getting kicked out of China in the last while, and then with even some of the miners moving to Texas and things like that, and then you had problems with electric grid and shut down, or you had the weather related problems and stuff too. And so you add that in there, lower mining output. What does that mean? I mean, I was doing some crypto mining on the GPU side before. I mean, if you want it as a utility, you mine it, you sell it. You mine it, you sell it, right? You don't hold it, because that's not, you're in the utility business. You know what I'm saying?
Yeah.
So if there's less mining, and also the hash rates have risen, so it takes more hash power to solve equations, to validate a block, then that just plays into less coins probably will be sold. So you think about that. Think about, usually there's been a lot of cashing in of Bitcoin converting to US dollars so you can purchase things, because, reality is fiat is still king, and you want to buy things that the US dollar can buy that you still can't buy with Bitcoin or crypto, right? So if the dollar is strong, then it makes sense to cash in some crypto and convert it into the US dollars. Now, if the dollar weakens, then maybe they'll be less likely to be selling Bitcoin. And then you have the the fact that it's all part of this whole speculation thing about, is the Fed going to be aggressive? Are they going to be, slowing down, maybe not achieving target, maybe not staying at target that long? Maybe the economy will get so concerning that they'll back off altogether. I don't know. The market wants to be hopeful about all these things. We still love that drug that we had of free money, right? Free money from helicopters. I mean, the market loves that drug. So I think some of that's being factored in as well. And then that lower volume just intrigues me. I'll give you an example here. So in 2017, when we were also at around the same level of 20,000, the volume was 56.17 million for the month. And so far this month, we've only done 3.53 million, and we rallied from the 16,000 up to the 21,000. So we've only done 3.53 million Bitcoin, right? That's it. So yeah, there's still a half a month left. We might be able to get up to 6 or 7, but that's still relatively light compared to 2021 and earlier. So the years of 2022 and 2023, so far, the volume has been extremely light. Right? So there's just, maybe not as much interest, maybe not as much money floating around to do this thing. But I think that there would be a potential chance that if volume was light and there wasn't any opposition, that, the biggest players in the space, the ones that control, the most coin, could make a run for it and try to get this thing way back up there. It's possible. I've seen this movie before with stocks and other, assets where it starts to be thinly traded and then they really, move it, right? So, and this isn't a regulated industry, right? Crypto's not regulated like stocks are. So the aspect of manipulation is entirely possible. I thought it was manipulated sitting at 20,000 for so long, month after month after month, just sitting around 20,000. Then it dropped down to that 16,500 level. And it looked again like it was manipulated, right? Now they got it back up to 20, 21. It doesn't surprise me that they run it to 30 or 40 or 50, They wouldn't surprise me at all. So anyway, I just wanted to bring that to your attention because it can go back into the deck in terms of that leading indicator or confirming indicator of risk on appetite too, right? Okay, another one is copper. With the China reopening, we've got copper seems to be popping back up. I mean, we've already had gold and silver move. Now that's really connected to the US dollar. Copper is somewhat connected to the US dollar because it's a base metal, but it's also connected to recession. So if you see copper rising, that means that the recession concerns are, less so. And it means that China is returning to be, more of a consumer and more of a manufacturer again, because the lockdowns obviously have harmed a lot of that. So, and then on the, we've got WEF meeting this week, right? It started today in Davos. And so some of their concerns from all of their, what they call stakeholder capital, all the companies that are associated, got everything from energy crisis, inflation, cyber attacks is a big one. If you saw the video recently that was put out by Klaus Schwab on cyber attacks on critical infrastructure, food supply crisis, deployment of nuclear weapons and biological weapons and so on. So those are down at the lower end of, obviously the impact would be great, but the probability of them a nuclear deployment are still lower. But so what interested me, Dave, was the biggest concern by all of the constituents that they've, members and affiliated companies and blah, 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 and people in general, I guess. Energy supply crisis and cost of living crisis are the two most things. Now, oil is still in the weaker threshold. And so with oil coming down, that alleviates a bit of the cost of living, right? And the energy supply crisis as well. I mean, what's your gas now in California?
In the four.
You don't even fill your tank with gas anymore. You just fill it with water from the rain, right? I mean,
yeah. No, we're down
talk about reversion to the mean, Dave. From drought to
I know this is the most rain we've had like ever within a week. It's just looks like Hawaii here. It's just green everywhere.
Well, we had one atmospheric river here, and it nearly destroyed our whole province, right? And you've had how many atmospheric rivers come through your state now? Quite a few. There's one more to come, isn't there?
Yeah, this week.
Yeah, so yeah, this is reversion to the mean. So when you see a period of drought for 7 years and it doesn't rain, do expect it to come and revert back at some point, and you'll get your when you average it all out. This is the problem with averages. When you average it all out, it'll be the same amount of rain per year, except you didn't have rain for 7 years, and then you got 7 years worth of rain in one
2
month.
weeks.
2 weeks. So this is, again, when we deal with probability and statistics and things, like there's always this clumping effect, right? And so averages, are they can appear one way. And so the thing about trading baskets and pairs, it's always about, what is the duration of your drought? What is the duration of your drawdowns? And that's the important thing. So I was talking to one of our other traders about this, and he has an idea that a person should think about what the strategy drawdown is. So try to identify what that maximum drawdown is, and then build that in right away from the beginning, so that when you start trading, that you've already accepted that drawdown. And it's almost like that cash for that drawdown has been sort of set aside, that it's like, I can lose this much money and I'm completely okay with it because I already factored that in. So if you can identify what that maximum drawdown is, you can go confidently forward and then sort of defend it, meaning that you constantly optimize and you constantly play offense and defense to mitigate that. So to adapt, to optimize, to tweak, to review, to analyze, to see why a drawdown is beginning, so that you can stay ahead of it and never hit that maximum drawdown that you had already planned for. Does that make sense?
Yeah.
So let's say, for example, that you know that you can go for 3 weeks with bad numbers, just bad results for 3 weeks, and let's just say that you identified that was your maximum drawdown. Well, then if it starts to happen for 3 days in a row, you're okay to still proceed because you haven't hit that threshold. But if you did hit that threshold, if you actually lost exactly how much you planned to, then you would stop at that point and really kind of assess where you're at, right? Because you don't want to go beyond that. But like that might be helpful. Give it some thought anyway, guys who are listening to this. Give it some thought, because it doesn't matter whether it's a pair strategy or basket strategy or single stock strategies. You're going to have drawdown elements, and if you factor them in ahead of time, it's sure going to help a lot. Okay. Just want to run through the futures here, where we're at right now. So we had the futures trading on Sunday from 6 p.m. Eastern time. And right when they started trading on Sunday, they popped up a little bit. Let's see, hold on. We got, let's go back to Sunday. Yeah, they popped up a little bit at first, all the way to about almost midnight Eastern, and then we start rolling down all the way to this morning, early this morning, and we pop up back a little bit, and kind of we're kind of halfway there at the moment. And where did we close? So on the 13th, we closed. So we're a little bit lower than where we closed on the 13th. So that the futures have been trading, whereas the equities market has been closed. And the Dow right now is down 71 points, or 0.21%. S&P's down 15 3/4, or 0.39%. NASDAQ's down 73 points, or 0.63%. Russell's down 6.9, or 0.36. The VIX is up 1.54%, which makes sense. And looking at our currencies at the moment, US dollar was a little bit bullish earlier. It's still up at slightly 0.12%. This is going to be really key for the behavior of gold and silver and some of the other commodities. It's going to be kind of important for the risk on trade as well. If we see a strong dollar tomorrow, it could change just based on Goldman's and Morgan Stanley's earnings. Depends. I mean, part of it depends on the earnings. Part of it depends on what the conference call with analysts and so on is, how that goes, what the questions are, and things like that. And there's also not just the past earnings, but there's the forward guidance as well. And then, of course, we have, let's see here. Let's look at energy. Energy had a good week last week. We were up from really the 11th, 12th, and 13th, where it was a pretty good showing. Started actually on the 9th. I mean, Monday was up, and then it pulled back a bit on Tuesday. Wednesday was stable. And then Thursday and Friday it launched pretty good. So oil has been up. So I wouldn't be super bullish on it right at the moment. And then let's look at gold here. Again, gold is going to be affected by the dollar largely. So hope that helps. Anything else to cover? Did we miss?
No, that's
okay. All right. Well, have a good trading day, and catch you tomorrow.
All right. Good luck. Thanks.